If money was really tight, you would see stocks and real estate values going down significantly. You wouldn't see stocks sometimes soaring by 100% in one day, as we see now.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Dr. Marc Faber joins us today. Dr. Faber studied economics at the University of Zurich and at the age of just 24, obtained a PhD in economics magna cum laude. In 1973, he lived in Hong Kong, where he became managing director of Drexel Burnham Lambert. And in June of 1990, he set up his own business, publishing a widely read monthly investment newsletter known as the Gloom, Boom, and Doom Report, where he highlights unusual investment opportunities. And he has also authored several books, including Tomorrow's Gold, Asia's Age of Discovery. And we're delighted to have Dr. Faber join us once again today. It's time to saddle up and silver up for Dr. Marc Faber. Dr. Faber, welcome back to SBTV. How are you doing?
Thank you very much for having me on your program, and I'm doing okay. Still surviving.
Dr. Faber, in a recent commentary on your gloomdoomboom.com website, you said there are only three ways to meet the unpaid bills of a nation. The first is taxation, the second is repudiation, and the third is inflation. And you noted that the third choice, inflation, will be the choice to meet the unpaid bills of a nation. Can I ask you, Dr. Faber, why did you choose inflation?
Well, basically, people don't realize that, but inflation occurs when spending in a system exceeds the production, and that comes usually about because fiscal deficits arise by the government, the household sector, and the corporate sector cannot have eternal deficits, but the government can for a very long time, not forever, but for a very long time. And so, usually governments, especially in democracies, they don't want to increase taxation because they know that the wealthy people can always avoid taxation one way or the other. I mean, I'm talking about the ultra wealthy. And then the taxes always fall back on the poor people, the lower middle class, and the upper middle class, and everyone who gets a salary. So these people are then hurt, but these people are the majority of voters, so you don't want to hurt them too much. So the easiest way is to actually collect taxation through inflation.
How about creating and building things that the world needs, manufacturing for nations throughout the world? Would that be a way for the US or Western countries to pay their bills, or are the days of manufacturing long gone?
Well, the bills, if you have a household, for sure you can pay your bills if they're manageable. But if they're excessive, what are you going to do if you have huge debts and small income, and you have to pay for your running household expenditures and so forth? So the US government and other governments in the Western world, in addition to the horrendous government debts they have also the unfunded liabilities. And these are extraordinary amounts. And I don't see any way how these unfunded liabilities can be paid unless money is being printed. That's the only way.
Currently, the Fed is trying to burn off the money supply. Do you think it's eventually going to have to turn around and we're going to see that printing press come back online?
Well, but the funny thing is, if money was really tight, you would see stocks going down and significantly. You would see real estate values going down significantly. You wouldn't see stocks sometimes soaring by 100% in one day and having huge volumes of trading and option volume exploding and so forth, as we see now. Interest rates have gone up, but there's plenty of liquidity in the system. And let me formulate it this way. You take an ordinary citizen like myself. I have cash and I have bonds and I have stocks and I have precious metals and real estate. Now, on the cash, for the last few years, I earned less than 1%. But now I have on my cash, and because my bond portfolio is structured in such a way that, say, every year bonds are maturing. So the bonds that are maturing now, I can invest that cash. I just made some deposits for 9 months and 12 months at 6%, tax-free. And other offers today I got is around 5.5%. So actually, in my personal case, although my business is not as good as it was, pre-2019, but I'm just saying, in my personal case, the liquidity position has actually improved because I have the cash flow now from the deposits, which I didn't have before when central banks kept interest rates artificially low. In my view, our interest rates are still artificially low. They should be higher, but they are higher for sure than they were 2 years ago.
Okay, yeah, I'll stay with this for a bit because the Fed is expected to raise rates by another 25 basis points or so. Do you think after which there will be sort of a wait and see position, or is this the beginning of a pivot where they are going to bring rates down? Or in your case, you're saying maybe after this pause, they may need to take rates even higher?
Yes, the interest rates in the long run, they move in long cycles and along the rate of inflation. My view is that we had a peak in the rate of inflation around the world in, say, 1980, and the peak in interest rates in 1981. And then we've been in a downtrend, which lasted essentially until May, August 2020. Partly it was kept artificially low by central banks, as I just explained.
Mhm.
And now we are in an upcycle for inflation and for interest rates. And it is possible that the rate of inflation will continue to moderate for a few months. But today I looked at food prices. It seems that food prices, if I look at soybeans and at wheat and at corn, are again trending upwards. And in countries like Nigeria and India, excuse me, we have a rate of inflation, of food inflation, of around 15%. So in my view, actually, the increase in interest rates that we experienced, combined with the liquidity that we still have, will actually lift the rate of inflation in future much more.
Okay, so do you think eventually that's going to hit the job markets where the Fed may be looking at creating an atmosphere where the job market may tighten up a bit?
Well, the job market is a funny phenomenon, and I don't trust the statistics entirely. I mean, the number of unemployed people has gone down. So the unemployment rate is very low. But the number of people with disabilities has gone up by millions and millions. So it seems that people are shifting into the category of disabled people because maybe their benefits are higher than being unemployed. So I don't know. I'm not a labor economist, and even the labor economists don't agree entirely about this phenomenon. But one thing is clear. If you have deficits of the magnitude of the US, and government spending at the present time is in the US is growing at something like 15% per annum or more. If you have these deficits and at the same time relatively easy monetary policies, you will get inflation.
If you're enjoying this interview with Dr. Marc Faber and I, please consider subscribing to our YouTube channel. And I'd like to introduce to you Silver Bullion's new way to save smart by saving in silver, star silvergrams, where you can own real-time tracked metals representing your fractional ownership of fully insured and allocated investment-grade bullion stored in our vault. To learn more about this product, please visit our website at www.silverbullion.com.sg. Yeah, Dr. Faber, I want to share something with you regarding inflation. I came across this from your favorite news source, CNN. And according to an article that came out in February earlier this year, by 2032, some 9 years from now, they're expecting the interest cost to be some $3 billion per day in about 9 years. When you hear that number, 3 billion per day, what comes to mind?
It is clear that the interest expense on the US dollar debt, as well as the debt in Japan and in Europe, will go up as interest rates go up. But it could be manageable if you keep on printing money. I mean, if you go to Turkey, you walk around Istanbul, the rate of inflation is 80% per annum, and everything functions. Of course, the poor people are impoverished, but life in Istanbul is quite normal.
Okay, and that's because they'll just continue to print money?
Yes, they print money, yes. They
Okay.
are let's say, the model for Mr. Bernanke and Miss Yellen and all these people at central banks. They all believe in the theory of Mr. Mugabe in Rhodesia and in Zimbabwe nowadays, who just printed money. He asked his ministers, I want to build a bridge. Then they tell him, oh, we don't have the money. They says, we print money. You can run a system without taxation and by printing money. But the result, as I tried to explain to you, but you don't seem to believe me, is inflation. Because inflation is a tax you can collect as a government taxation by taxing individuals on their income and wealth and so forth. And you can tax them through inflation. You don't collect any tax at all, but you will have inflation. That's a way that leads to a catastrophe. But for a long time, it can prevail.
Okay. Yeah, I completely agree with you on the inflation part though. Absolutely 100% there. Uh we also see de-dollarization happening. Will the US dollar be do you think it'll be totally eliminated, or will it take a sort of a shared position where we might see multiple currencies as world reserve currencies, and have we ever seen anything like that before?
Well, we've seen it many times. I mean, the Romans had a global currency in during the empire, and then it vanished. But there's still the Italian lira. And the Spanish had a global currency, a reserve currency, and the British, until after the First World War, the British pound was really the global currency. And then the dollar came up, especially after the Second World War. So the dollar will not vanish and just disappear, but more and more trade and more transactions will occur outside the US dollar. And this is one reason I recommend investors to have money outside the dollar region. And the dollar region includes, of course, the US, the UK, then the VOC members, Canada, Australia, New Zealand, and so forth. So I would have money outside these jurisdictions.
Let's say we do continue towards de-dollarization and other currencies that look to be getting stronger. How do you envision the environment within the US where a large number of people still only operate in US dollars?
Correct. Well, in the US, someone could argue, okay, the Fed prints money, the dollar goes down, but the stock market goes up. So the rich people don't care. The stock market, say the AI related stocks have gone up much more than the dollar depreciation. Other stocks didn't go up this much. This is the difficulty with participating in an inflationary environment. The inflation doesn't touch the entire price level equally and everything goes up equally. No. Some things go up here and then they go up there and so forth. So you have to kind of trade this inflation accordingly. I think it's quite difficult to do it for most people. That's why I'm diversified.
Yeah.
And at all times diversified. I have some dollars, but also non-dollar currencies. I have investments mostly outside the US.
So part of this diversification, are you seeing gold as one of the tools of the trade right
Yes,
now
of
for wealth
course.
protection?
Gold and silver and platinum are the favorite assets to hold in the current inflationary environment. But I have to say that the investment community, they find these precious metals to be not sexy enough. They prefer to have something that moves in a day by 20%, like stocks, like the unicorns or the SPACs and so forth, meme stocks and stocks with the large short positions and cryptos and so forth. They love things that have a potential to go up 20% in one day. And gold and silver and platinum don't share that kind of quality. But if you want to look realistically, in 1970, you could buy an ounce of gold for $35. It's now over 1900. Well, in my opinion, it's kept up with inflation reasonably well. So I hold gold, of course. Now, someone else may say, I prefer real estate. Well, in inflationary times, it also performs well until the dumb government officials that we have today will decide to introduce rent controls. And in inflationary times, rent controls do occur because they are popular with poor people and with the voters, but they destroy the property market.
Are you seeing some form of rent control possibly coming into Europe or in the US?
Well, yeah, I think rent controls will occur on a state by state basis,
Mhm.
but in some cities there are rent controls already, not strictly applied, but we had them in Europe after the Second World War in Austria. There were very strict rent controls. And when I went for the first time to Vienna, in the years they must have been like 61, 62, the property market was a disaster. I mean, rundown buildings, nothing worked compared to, say, Switzerland, where we had rent controls, but in a very limited way. So anyway, that is the result of rent controls. I went to Mumbai, Bombay at the time, in 1973. The Indians, for some reason, inherited from the British colonial administration a system of socialism, and they had strict rent controls. And if you rented out an apartment, the tenant could then actually transfer the apartment to his children. So the apartment stayed forever in a family. And in 73, they paid the same rent as they had paid in the 1940s. The whole property market was a complete disaster because the rental income was below the maintenance cost. I tell you, you want to destroy a society, bring in socialism. Europeans and the Americans, they're committing suicide by having these leftists in the government. I just watched yesterday a movie, and it was filmed in Cuba in 1954. Okay? It's an American movie. The title doesn't spring to my mind. I can look it up later on because it's a good movie. You can see Havana in relative prosperity. Everything is well maintained because the movie was filmed in 54 in Cuba, not in a studio in Hollywood that distorts everything. It's a lying factory, like they would educate the politicians with lies. Anyway, it was filmed in Havana. Havana looked decent. And I agree that there was not decency for everyone in Cuba at the time. But I can tell you, the first time I went to Havana was in like 1991. Completely dilapidated buildings. Nothing worked. Poverty everywhere. And all I'm saying is you want to destroy your society, you bring in the socialists or the Bolsheviks or the communists. It's always the destruction of everything. Nothing is created by the socialists.
I guess sort of in line with this, we keep hearing the term, a type of an economic reset coming on. I mean, do you think this is part of the reset that people are talking about?
No, in my view, the reset will be a move in the world towards total totalitarian regimes. I mean, basically, the reset idea comes from the WEF, or the World Economic Forum, that started out in Switzerland, in Davos. We are the oldest existing democracy, and yet we support these kind of organizations. But the Swiss are good at taking money from everybody. Anyway, to make a long story short, this club, the WEF, has nothing at all to do with a democracy and everything to do with a system that is run by an elite. In former times, we had the Romans, the consuls, and later on the principe or the emperors and so forth. And then we had a feudal system in Europe that lasted until the end of the 20th century. And we had in the world never democracies until just recently, because when the US constitutions came about, it wasn't meant that everyone could go and vote. No, it was for educated people to vote and not for everyone. And so now we have these democracies. Democracies are failing, and the Schwabs of this world, they think that they should run the world. They should run the countries. It's like Mr. Biden. He prefers to avoid the Constitution and bypass the Constitution. It's a very bad example. A president should uphold the Constitution, even if he feels that the judges on the Supreme Court made a mistake, but he should maintain the integrity of the Supreme Court. Not every decision they take is desirable, but in general, it's good for a country to have a Supreme Court that is not a populist court, that is not where the judges are just elected by the people. The judges should be really qualified people, the people that are on the Supreme Court.
Right. That's a great point. Dr. Faber, last question before we head out here. I got to ask you about the BRICS. The BRICS nations. They're talking about a type of a gold-backed currency. Do you think this is going to happen? And should that actually happen, what do you think it's going to look like for the dollar or other currencies?
Well, I'm negative long term about the US dollar for different reasons, but largely because of the inflationary pressures that will occur. And about the BRICS currencies, I suppose more and more trade will occur between countries and countries, and they will settle the trade in non-US dollar currencies. But since you asked, I see a big opportunity in the stocks of some emerging markets. First of all, the Latin American markets, Brazil, Colombia, Argentina, Peru, Chile, and so forth. Because in World War III, and that is not my view, but some of my educated friends, they think that World War III has begun. Latin America would be a little bit aside. The war would be fought between Russia, China, and the US and Europe, and so on. So in that scenario, you want to have some money in Latin America. I also like to point out that in Asia, we have some very depressed markets, including Pakistan. And there are some stocks in Indonesia that are cheap, in Malaysia, in Thailand, and Vietnam. And at the recent Barron's Roundtable, not one of the 10 panelists mentioned Chinese stocks, not one, or a name in Hong Kong. Some of these stocks are very inexpensive. That's where I would look at and not worry too much about whether the BRICS will have their own currency or not. I would just invest some money outside of the US dollar in countries that have stock markets that are neglected.
Okay, so emerging markets. All right, that's a great point.
Correct.
Doctor Faber,
Selectively.
selectively, yeah, that's where we're going to come to you to find that out. Dr. Faber, before we head out, can you tell us more about the Gloom, Boom, and Doom report and how people can follow you to get more of your views and insights?
Well, they can go to the website gloomboomdoom.com, all in one word, gloomboomdoom.com. And I have two reports. The one is called the Gloom, Boom, and Doom report, which is more for like institutions, and then have a monthly website report that is more timely oriented, or for, say, sophisticated individual investors. But I don't advertise my services. Everybody has to take in life personal responsibility. But I think that by living in Asia for a very long time, I have a view that is a little bit different than an analyst who sits in the US or in London. And occasionally I see unusual opportunities. Not every day, and not all of them work out. I also, in my investments, which I carry out, there are some losses and some winning positions and so forth.
Dr. Faber, I appreciate your time, and I look forward to doing this again soon.
Yes, with pleasure, anytime.
That was Dr. Marc Faber sharing his views on the economy and more. To learn more about Dr. Faber's views, please visit his website, www.gloomboomdoom.com. If you like this video, please subscribe, share, and give us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.